Okay, great. All right, so let's get started here. Good morning, everyone. Good evening and good afternoon for all of you guys around the world. This is Navin Prithyani, analyst for forexwatchers.com, urbanforex.com, and CEO to Black Tower Investments. I'm currently out in Canada now. I moved here from Hong Kong, so the audio should not be an issue this time. And if there is any lags or anything, just let me know. I'll slow it down, or we'll give it a moment for the screen to refresh. Yeah, I hope so too. For scale. So let's get started here. We're gonna go over Divergence again, the one that we were covering last time that we weren't able to do, and we'll go over it again. Before I begin here, how many of you guys are new here today? Okay, first time to one of my webinars. Okay, Juan, Shuman, Rashid. Okay, the spell count. All right, welcome. Okay, and George. All right, so we got quite a few people here that are new here. Boyke, good to see you again. Drew, okay, so let's get started here. We got like 45 minutes in here, approximately 40 minutes, and let's get right head on right now. What is the currency pair that you guys like? We'll start off with that currency pair. Okay, euros? Okay, so I'm on euro right now, and then we'll go into US dollar CAD after that. Okay, euro USD. Okay, let's start off with, let's say the 1 hour charts. I'll put a divider line for you guys so you guys can see what day is what. Okay, actually we can remove the divider. What I'm going to do is I'm going to start off by putting a oscillator, it's an indicator. I'm going to go to Insert, Indicators, go to Oscillator, and I like to use Stochastic. Okay, click on that one right there. Keep the setting standard in case you have a feeling the standard might be off. Click Reset and click OK. Okay, and then you'll see this whole thing come out on the bottom here. Okay, now what we do in Divergence, okay, what we're going to do, there are several types of divergences. You know, there's regular divergence and there's hidden divergence. Okay. For the sake of saving time, we're not going to get into each thing and get into the vocabulary and the theoretical knowledge. I try to stay away from theoretical knowledge and go more into practical. It's more hands-on. So less talking and more showing, you know? So, what we're going to do is we're going to refer to divergence as opposites. Anytime there's an opposite, it basically indicates a reversal in price. Okay? Now let me show you what I mean by opposites. Okay? When you take a look at what the markets are doing, okay? Now, for example, let me find you a spot that we have an opposite. Now, take a look from this high to that high. Okay, let me make this thicker for you. Yellow. There we go. Okay. Now you can see how the highs are getting lower. But if you look at the same area on your indicator, your highs were getting higher. Okay, that's an opposite. That's an indication that the price is going to reverse. Okay, it's going to reverse on what it's doing. So as it starts to rise here, it stops and it reverses. Okay? Hello, Haribo. Welcome to the room. Okay? So let's go into, this is for a short movement. Okay? The divergence basically shows you, or the opposites basically show you that there is a indifference between what price is saying and what the indicators are doing. it's a very good method to catch where all the stop hunting is usually happening. Okay? The stop huntings usually happen everywhere, but with Divergence, you can catch the most optimal levels. Okay. Now let's take a look at some more examples here. Let me show you for a different direction. Okay, here's a miniature one right here. You'll see from here to here, price was on a slight incline, but from here to here, you see your indicator was on a steady decline. Okay, so how do you check this when your divergences happen? How do you know where to track them? Okay, this is how you do it. Let me get you to another example, and I'll show you how to make it easier to spot these. Okay. So once you basically are checking for your certain highs and certain lows, okay, look for extremes. Sunshine, I'll go into the stop hunting after this example. I'll explain that really quickly. Okay, let's see here. Okay, remember never to cut through data. Okay, don't go through, like, if you have to connect from here to here, that's perfectly fine. But connecting, for example, something like this. If you want to connect something like that, and you're cutting through this data here, don't do that. That's not the right way to do it. Okay, so don't cut through data, don't cut through candles. All right, now let's find you one. Okay, this is how you check. Take a look at these lows. This low to this low. The markets were slightly higher, right? When the markets came down here, it was slightly higher. When you check your indicator, you also see that it was slightly higher. I mean, we don't have what we call an opposite. They're not saying two different things. They're saying the same thing, so there's nothing insignificant there. Okay? Now, when you do have something, when you have an opposite scenario, you will get an area where you can check this. Let me switch time frame real quick. So let's see how to spot. Sometimes these pop out right at you. Sometimes you have to look for them. And you can use this with MACD also. Or you can use it with RSI. Okay, any indicator with the moving averages in them. Okay, so here's a little quiz. Okay, do we have opposite here? No, right? Good. Okay, what about here? Okay. Here? Okay. So now, once candle. It's cold out here. All right, thank you. All right, so you can see over here on our prices we have lower lows here. Our indicator is slightly higher. Okay. Now, how do you check this? Now, if you do a horizontal line from where you started each thing, we started this from here, right? Let's put a vertical line exactly straight. Did the indicator ever cross this? Okay, no. In this scenario, the indicator has never crossed this line. When you do this same thing here, when you make this vertical, horizontal, sorry, where is the first area that you see the cross? Okay, it's right around here on this big red candle, right? That's when your opposite first starts to show up. Okay. Now, once your opposite first starts to show up, that is a moment where people are looking at this as in like, Now, there's one of two things happening. Okay, at this moment, the indicator is slowing down, telling you that it wants to go long. Okay, which means your most trading strategies, trading systems, automated EAs are getting ready to go long. Okay, at this very moment here. People are looking at this for price action. People are looking at this as markets going down strong and then coming down weaker and slowing down here. They're looking to go long as this is a double bottom now, a triple bottom in this area. Okay, and it starts to break. Once it starts to break, two things are happening. Okay, there's one set of people who are buying at this level. Okay. Okay, keep track of what I'm trying to say here. Okay, we'll go over the questions later. There's one set of people who are trying to buy at this level, okay, which are looking at this as a double bottom, or triple bottom, or what else? There's a second set of people also trying to buy, and this is 80% of the market, which comes from indicator-based run systems and strategies and everything, where everything went going to oversold. You know, it's not just that this is oversold. You put on any other indicator out there, it's going to start saying oversold in this area. You put on Bollinger Bands, this and that. Everything's going to coincide with each other, and it's going to say long. Okay, so all the longs are getting ready over here. So that's the two sides of people getting for long. Now, once they're getting long, obviously their stops are where? Where do you guys think their stops are going to be? Okay, slightly below, right? Because that's the logical area to put them. Let's mark these areas down. Okay, so the stops are in this area. Okay, once the market breaks down, all these people stopped out. That's step number one. Step number two, a next set of traders come in. We call them the breakout traders. The moment they see a breakout like this, hey, we need to sell. The market's going. If I don't sell now, I don't get my Mercedes. They start selling, and they start selling hard. Okay, when they start selling hard, their stops in this area. Okay, their stops are now kept here above the area where they had the breakout. You know, usually somewhere around here to keep them safe. Now, what the reality happens is they get stopped out as well. Okay, because the market then kicks back in. Okay, this is how you get to spot a divergence. Okay, it shoots down and then it kicks back in. Okay, this is a very, very strong way to do stop hunting because it takes out everybody in the market. If you take out literally any type of person that you can think of trading in the traditional way is going to get stopped out here. Okay, the only person left out there is a person who trades with no stop losses, but there's nothing to worry about that person because he's not going to get anywhere regardless. Sooner or later, he's going to dump money in the forex market. So a person who just comes in, open stop losses, you know, no direction, he's never going to scale. So that person is safe, but not for long. Okay, so these are the very moments where you can catch what's actually happening, and you get to see what's happening in the markets live. You get to see people getting excited and jumping in and stuff like that. Let's go over some more examples. Did everyone understand the little theoretical part that I just explained about how stop hunting is actually very, very useful? Okay, it's useful for brokers, it's useful for larger institutions, and it's in fact for a person who just takes the moment to actually analyze these things. It's useful for them also because it tells you, don't enter now, give it a moment. Let everybody who has the itch in their fingers to trade, let them get in, let them get burned, and then we get in. So patience always pays. Be very, very patient. Okay? So now let's go in further. Let's see. Okay. Some of the best divergences or opposites that you will see happen in the oversold or overbought area. Now, what I mean by that is this right here, if you connect from here to here, we have one area in the oversold, but the other one is not. Okay, but if you connect something like this, that's okay, because now you have, oversold area. Or if you connect something like this, you have something in the overbought area. So it's a little bit more strength there. Okay. Now take a look at this one. We got an area here. The markets are going strongly short. We got an area here where the markets don't show that significance. Okay, it literally doesn't show that. So now if you take your line and make it flat, what I mean by make it flat is make it horizontal. Horizontal. Okay. The indicator never crossed this area. You make this horizontal and you find out when is the first time you see the opposite happening. It's right here on this red candle. Okay, that's the area that people are expecting. When this is the first time this is spotted. Because don't forget, divergence is also taught very widely on the internet. Now, spotting a divergence in the past, what I'm showing you guys, is super easy. But doing it live, this is exactly what you see. This is the moment you see the divergence happening and people start buying right here in the blue area. But that's not the case. That's not where the buying begins. You have to give it a moment. You have to let it settle. Okay? You have to understand what it's trying to do. Okay? Alright, so at this particular case, when you see that the prices are finally breaking out, okay, it goes down lower, you start to see these tails come out showing you that there is inability to go further down. Okay? That inability to go further down gives you a heads up that, okay, we are getting ready to go long. Okay? There's a couple of things you can do. Okay, if you want any assistance with this, there's a couple of things you can do. Let me put in the Eclipse here. I can show you some tips and tricks that I teach over at Forex Watches. Let me make this yellow as well, and the darker. There we go. Should be better, yeah? Okay. Alright, so take a look at this. We got an area here. We have a high there. We have a high there. We have a high there. And we have a high there. These are all the extremes that I can see. What can you guys tell me about this when you see this? What do you see? Okay? We got the lower highs, right? We see a downtrend. Okay, we see a downtrend, right? So now, in this strong downtrend that's coming in, you're starting to see that, okay, we're getting this divergence that is coming in, and how can I spot this very clearly that I don't get burned? I see the divergence, and I know for the fact that I have to wait. I saw a webinar about Navin on FXFree.com, and he said wait. Okay, so I'm waiting, but how long do I wait? So that's the question that comes up to your mind. What do I do? How long do I wait? Here's the trick. As you see these highs getting lower and lower and lower, your lows, same scenarios. Sorry, I'm really bad at drawing these circles. Same scenarios for your lows. Okay? Now, at this very moment, you can pull down when you're seeing this sequence of a downward channel. This is what we have, a downward channel, right? Boom. So once we see this downward channel, pull down one time frame lower. Okay, I'm going to go down to one time frame lower. I'm going to go down to the hourly chart now. Let me show you. Hourly. Sorry. Let me go back to where we were. I know this is what I don't like about 1, 2, 4. Okay, this is 4th of July. Alright, there's 4th of July. Come on. Okay, this looks beautiful. Okay, so where's that area? Here we go. This is where we had the divergence on the 4 hour. Now this is the lowest point that we saw. Now no one's telling you to catch the lowest point. Find out where the markets are doing, this? Okay. Okay, this was the lowest point, right? Find out when you see the markets are showing you that it's unable to go lower than this area. Okay, you see how everything gets low here? Okay, follow my trend line. Everything is getting lower and lower and lower and lower and lower. And then now suddenly, from the bottom, it's going upwards. This is your first indication that the move is coming to an end. Okay, it starts to go north. As it starts to go north, it does more pullback. You're able to catch those pullbacks without any issues. Okay, those are your best moments. Okay, this is what we call backdoors over at forex watchers. Okay, let me show you another example. It'll help you guys understand. Okay, do we need indicators as we read candles? Yes, you would need the indicator to see the opposites, right? Is that your question? I'm sorry. Forex gal, wait till the stock rises above 20. No, actually that's not necessary because that can still be confusing. There are many times where you'll have something like this where you'll see a chop where it's trying to go down and then it pops right back up. So that really doesn't help. Like putting your focus on the indicator itself does nothing. So don't even put your focus on the indicator. Okay, now take a look at this area as well. Okay, markets are moving downwards, and you see similar scenarios here. From here to here, first area across was this red candle here, but it went as low as this area. And from here to here, it's slightly higher. Okay, so your first area where you saw this was here, where you're like, hey, an opposite is happening. Your alarm is going off in your head that I need to watch this because this is going to turn around. This trend that was coming down is coming to an end. Okay. All right. So once you start to see this happening, now what does this look like to you? Now just imagine the mindset going through this whole scenario is the market is showing where it comes down. Yeah, I'll delete this. The market is showing it's coming strongly down, and then it's the inability to go down further. It goes higher and higher and higher. People are looking to buy this thing. Okay? People are looking to buy this thing, and people who do buy it put their stops slightly below here. Now, obviously, when a strong candle like this comes down and stops them out, they think, oh, looks like the trend is still going down. I'm going to sell. Breakout traders also sell. Okay? And all the sell moments start going on here. Now, when the reality is once the sell initiates, pops right back in very strongly into a long. So this whole divergence opposite area is the moment where stops on both sides are triggered. Longs are dead and shorts are dead. Okay, as you can notice, it is not how you enter, it's when you enter. Okay, so the traditional methods that we are taught to enter, it's always going to lose. And the fact that you are able to get in at the same area, like, so it's telling you that everyone is entering here. We've got the professionals entering here, and we've got the regular traders entering here. But the difference is that where they enter makes a difference. Okay, and complemented by when they enter. Okay, does that make sense? Is that confusing, or does that make sense? Okay, great. All right, so let's go more into it. All right. So this is the first area. You see this going down. Let's draw it to here, and so we're gonna start watching this. We're gonna watch it like a hawk. Yeah. We're gonna scroll down one time frame. Oh, great! I'm doing it again. 14th of August, 2014. Okay. There we go. There's the area. All right. Markets were going up. They start coming down strongly, and large candles going north. Okay. Large candles going north. Now, we don't see, once it starts going north here, we don't really see anywhere where, let's hide all this. Let's say you don't see all this right here. Okay. Once you see a large candle like this, because of the degree of the drop it's had, you're going to get a very small chance of pullback. Now, in this particular case, you can go down even smaller to see, do you see the market going long and giving you the inability to come back down? But if I don't think I can get data on the 15 minute for this, but you guys get what I'm saying here is once you see the opposite, you can go down to a smaller time frame to actually analyze when it's getting ready to go. Okay. For all of us that we trade on forex watches, the thing that I always show is never trade trying to spot the lowest point because that's just useless. Okay. What we do is once we spot the lowest point, we put our vertical line there, and all of our trading happens on the other side, on the right side of that line. Okay. Keeps the risk to reward low but safer. Okay. Okay. Navin, scroll the chart so your point of interest is on the far left before you drop to the lower time frame. Okay. Yeah, actually, yeah, you're right. Okay. Now, okay, I get what you guys are saying in terms of data, right? To get data for. Yeah, I just installed this MP4 like 2 hours ago. I actually use TradeStation, so I just installed MP4 on this. Okay. Now let's go over the questions. Any questions you guys had? Okay. This is just part one of it. We're going to make it into a 2-part series. The next part is towards, I think later on next week. How to take profit. Okay. Now, a couple of things, right? You want to see is, there's more to this than just, okay, where do you want to get to enter? Take a look at where this trade initiates. It's the same area where the buyers initiated earlier. Now take a look. Every time the market comes down to this area, more or less, a buying pressure initiates. Okay? So as the markets come down to here, and it starts to react when you went down to the 1 hour time frame, you're seeing it starting to react. That's your indication right there that this again is holding. Okay, this level of support zone is holding again because the buyers seem to keep pushing price from this area. Does that make sense? Okay, So that's to help you with the entry. And in terms of exit, reverse the scenario. Where do you think your sellers are sitting? First level of sellers sitting right here, but we went straight through that. So you're holding on. Next level of sellers were sitting right here, went straight through that as well. So you're holding on. And the next target is up here, obviously. So you're going all the way up to this area, and that's when you have your exit. Make sense? So for example, if you were going short here, if you're selling from here, where would you go? Where is the area where the buyers are pushing it? Yeah, here. This is where the buyers push it. This is where all the trading activities happen. All the stuff in between, the candles moving stronger, it's just a continuation from what these guys have in the chart. Okay? Can't you draw line till the previous low on stochastics in line with green candle? I didn't get that, Drew. Can you rephrase that or show me where you're talking about? Okay. Also, any other questions? The line I drew on the stochastic. Okay. You mean to draw it from here? Is that what you're saying? Connect the low before the one on the right. You're talking about this one or this one? Okay, this one. Okay, but remember what I was talking about. Not oversold area. Okay, you need to be in the oversold or overbought area to make you be interested in a opposite. Okay, you want to check New Zealand dollar, US dollar real quick? Okay, let's do that. Okay, New Zealand, US dollar. Go. Daily charts. All right. All right. So what do we see on New Zealand USD? Okay. Tell me. Who was that? Raymond. What do you see on New Zealand USD? Okay, Drew. But wouldn't it be late to spot divergence if you connect it to oversold area in this case? No, it would not. It would not. Because remember, now when you're spotting, you have to see an opposite take place. The reason why I explained the theory of stop hunting to you is don't just spot the divergence. Make sure the divergence has meaning. Just because we have a high going higher and on the indicator a low going lower, it doesn't mean anything. But make sure it looks like an area where people are going to get crushed. And that's the area of interest. Okay, that's why we had to make this into a two-part series so I can actually explain more of this stuff to you guys. But this is the general knowledge of diversion in terms of first getting the hang of how do you draw them. Then the theories that go along with it of why they show up and how we can make use of them. Does that make sense? Okay. Boyke part 2 is just going to elaborate more on this. It should, I think the webinar is on the 20th, I believe, 20th or 22nd of this month. So should we always connect in oversold and overbought areas only? Yeah, those are usually ideal. Those are the most ideal ones. Take a look at this one here. Now, I can connect from here to here and here to here, but it's not an opposite nor is in the oversold area. But when you have something like this, that gets you interested. Now, take a look at this. Why is this one a little bit more significant? What does this mean to you? Now, why is it significant? It's because the moment we spotted this opposite happened right here when it actually broke through here. This market only turned around after 3 days, after 3 business days of going long and long, 4 business days of going long, long, and long, and then it dropped. But imagine the people who see this immediately and they're like, oh, divergence, sell, sell, sell. They're getting stopped out, then they try again, they're getting stopped out, they try again, they're getting stopped out. Finally, they're going to give up. And then it goes their way and they're like, shit, I should have known. You know? So the whole concept comes in, it's like, when is it best to enter? You know, and that's what we're going to bring in part 2. Now, part 1, this first area that you see the markets are going down, that's the area where people start selling. Okay, stops right above here. Well, we need that one last push up to take them out, and then it drops immediately because that one last push up gets people going long, thinking it's still a breakout, we're going long. So this congestion here of 3 days of candles just building up creates a sideways range, and the moment this thing starts pushing up and probing that long push north, start stopping out people. So once you see this scenario like this where you have stop out both long and short, this is the perfect scenario. Yeah, for the entry, you can go into a smaller time frame just to give you a heads up. Okay. Yes, it works on all time frames. Okay. Wait, I missed some questions. Let's see here. Forex scale, in fact, set at previous lower high left. Forex scale, where are you talking about? Sell at previous lower high. Over here? Okay, I understand. But yeah, people are also looking to sell here. That's another part, right? Double tops and stuff like that. You know. What do you say about pound on 4 hours right now? Okay, let's take a look. Why not? In fact, even I enjoy live markets more than showing you the past. Let's see here. Okay, so what do we have here? We got a divergence in the making, right? We got the price going lower, but our indicator, that's not the case. Okay. Now we need a cross for it to show us that to happen to show us that we do have what we call an opposite. But what is that one scenario? Who can tell me what's wrong with this one? Not in oversold area. Excellent, excellent. We need that factor. We need that factor. Okay. Boyke, yeah. You know how the reason why the question came out to check the cable is because when I put this as a straight line like that, we notice that there's an opposite going. It is because of this straight line we see that it's going lower than where we initially drew the line from, that we notice that if we do that here, the indicator never crossed. The indicator never crossed this line, but the price did. That's when we determine something opposite is happening. Does that make sense? Matthias, I was taking on 4 hour. Oh, on the 4 hours. I'm sorry. Let's take a look at the 4 hours. Okay, so let's see here on the 4 hours. What do we have? Okay, here we go. This is the one you're looking at, right? Is that the one, Matthias, you're looking at? Okay, here we go. Okay, so what can you explain about this? Okay, let's do this one really quickly. We got like a minute or two. If we drew the straight line, okay, this is the area where this red candle is dropping. That's the area where it's like, hey, we need to start shorting. Okay, so people who start shorting, obviously they got stopped out, and people who went long at this line as a double bottom also started getting filled. Okay, it started getting lower. All right. Now, what is significant about this area? Any information that why we would turn around from wherever it turned around? Okay, let me put a line somewhere around here to see, do I have price lifting off from this area from before? Well, look at that. We had this massive gap up. It shot north from here before. And below that, around here. So this whole area, we want to watch. Okay, let's go down to the 1 hour and see what happens. First level of indication, it halts. Second piece of information, first candle to go north to show you that it has inability to go lower. Okay, pure green candle going north. My personal entry would be in here. Okay, this would basically be like a breakout of this area and then a pullback. When I see a pullback like this, where it's in this tail here, where it wasn't even able to make it to the breakout area, that gives me a sign that it's getting ready to go. I need to get on this or it's gone. Okay, my exit, the area where the sellers initiated from. Look at this area where the seller blasted down from. That's the exit area. Okay. All right, guys. It is 10:47 now. We were only allowed 45 minutes in this session. Like I said, it's a two-part session. Not to worry. We do have the next session coming up on 20th or 22nd. Keep a lookout for that. Thank you all for coming. And for those of you who are joining forexwatchers.com, I'd like to let you guys know that we are full right now. You guys can get on the waiting list, and a representative can get in touch with you and help you out with any questions or concerns. But see you guys in the next webinar, and we'll take it from there. Take care, guys. And thank you, FX Street, for having me again.